Helping someone get a car sounds like a good idea until you're stuck with their debt, their missed payments, and possibly a lawsuit. Let's talk about why co-signing might be one of the riskiest financial moves you'll ever make. Hey, what's going on, guys? Calvin Russell here, CEO and founder of 850 Club Credit. Today, we're going to be digging deep into the real truth about co-signing on a auto loan, okay? Whether it's a family member, a best friend, or even your own child. I know that sounds crazy, okay? But there's a lot that you need to know before you agree to put your name on that dotted line. Let's talk about it. So number one, what does co-signing really mean, okay? So first things first, this is what it means. When you co-sign, you're not just helping them simply get approved. I know you want them to get the car or whatever you're co-signing for, okay? You're legally agreeing to take full responsibility if they don't pay, okay? For example, if your cousin forgets to make a payment, you are just as responsible as they are. The bank doesn't care about family drama. They just want their money. And let's not even talk about missed payments. They hit your credit report too, not just their credit report. Now let's walk through some real risk that you need to consider, okay? Risk number one, damaged credit. For example, if they miss just one payment, your credit score could easily drop by 50, 75, or even 100 points. And we're talking almost overnight, okay? So even if you have perfect credit today, it most definitely will affect you. Risk number two, lawsuits and collections. So in short, if the loan defaults, the lender can sue both of you, not just the person that's driving the car. You could easily wake up one day with court papers in your mailbox, even if you never drove the car once. It doesn't matter who drove the car. What matters is, for example, if it's an auto loan, the people that are on the loan. Number three, this is going to be emotional damage, okay? Family or friendships can easily get strained when money gets messy, okay? So for example, imagine going to Thanksgiving dinner, or I don't know, it doesn't really matter the holiday, okay? But knowing that they still owe $12,000 on a loan that you're tied to. They're not making monthly payments. They're not trying to figure anything out. They're not giving you any additional money. They're not even trying to get themselves off the loan, okay? Because again, now that relationship has now been strained. And here's the crazy part. Even if they wreck the car, even if they move out of state, you could still be stuck paying off the full loan balance. The next thing you want to know is, are there any good reasons to co-sign, okay? Now you might be wondering, is there ever a time like where it makes sense to do this, okay? And I gotta be honest, in some rare cases, the answer is yes. For example, a parent helping a responsible, that's the key word, responsible child who has a stable job, but they just don't have any credit history. Now that might make sense if clear agreements are in place and that payments are automated, okay? But even then, you should have a backup plan if things don't go the right way, okay? And so the short version is, don't just co-sign based on emotions alone. By the way, if you're trying to protect your credit and make smarter financial moves, don't worry, I got a free gift just for watching this video, okay? You can download my free credit guide right now. It's actually right here on this screen. You can scan the QR code. It breaks down everything you need to know about building and maintaining your credit the right way, okay? It's packed with a few other QR codes and things of that sort so you can learn more about your credit and actually take some action steps. And of course, the best part is it's completely free. Go ahead and scan that QR code or click the link in the description below to grab it today. Okay, next, let's talk about alternatives to co-signing, okay? Because we know that co-signing is risky, but then what can you do instead, okay? Option one, you can offer to help them with a down payment instead of co-signing, okay? For example, if you're willing to support them, consider giving them a small cash gift. Now you can determine what that is. That's up to you. I'm not counting your money, okay? Or a loan instead of tying yourself to the entire loan, okay? Number two, suggest cheaper vehicle options. Now this is usually if we're talking about like an auto loan, okay? Because sometimes the problem isn't the person. It's the fact that they're shopping for a $40,000 car when they really need to be looking at a $20,000, $15,000, or even a $10,000 car. Option three, help them build credit another way, okay? For example, a secured credit card, or maybe even becoming an authorized user on your card, okay? Now be careful with that. I got another video on that you can watch on this channel, okay? But this could help them qualify on their own later, like 30 days later, 60 days later. But again, at least they don't need you to co-sign. Also too, just a quick side note, if you've already co-signed, or if you have an auto loan that's costing you too much money every single month, you need to check out Caribou. Now, Caribou can help you refinance your auto loan, meaning lower payments for you, better interest rates for you, and more money back in your pocket, okay? So all you got to do is go ahead and scan the QR code right here on your screen, or click the link in the description below to learn more. Okay, next, the final checklist before you ever co-sign again, okay? Before you even think about co-sign, ask yourself these 5 questions, okay? Number 1, can I afford to make the monthly payment if they can't make the monthly payment? If the answer is no, you should not co-sign. Number 2, is my own credit strong enough to take a hit if things do go wrong, okay? Because you got to think about it like this. Even a late payment could easily drop your credit score. And this can hurt you if you're trying to get a home loan, a car loan for yourself, or even credit card approvals as well. Number 3, do I have this agreement in writing? It's not just about trust, it's about protecting yourself. That way everyone is on the same page. Number 4, and I'm hoping you already know the answer to this, okay? Do they have a stable income and a proven track record? If they already have no late payments or job instability, that's already a major red flag. They need to have consistent income coming in. They need to be trying to at least one day qualify on their own. Next would be, am I prepared to risk the relationship if things do go bad? We're not saying that they're going to go bad, but just in case, okay? Because financial stress ruins more relationships than almost anything else. People always need help. So whether it's borrowing money or co-signing, again, you just want to make sure that you're okay if things go the wrong direction. Listen, I get it. You want to help the people that you love. And the best way to help someone isn't always signing for a loan, okay? Sometimes the best way is teaching them how to stand on their own, showing them how they can build credit, how they can start, qualifying on their own for things. But at the same time, you want to make sure that you're protecting your credit and you protect your future. And always remember, you can say no and still love somebody. Thanks for watching. Don't forget to download the free credit guide and make sure you check out Caribou as well too if you're looking to lower your next car payment. I'll see you guys on the next video.